Okay, we completed our transaction log and we've identified which accounts were impacted by each of our transactions, and we've identified, are we going to increase those accounts or decrease those accounts? The next thing we need to do is to understand, how do we increase and decrease those accounts? And we're going to do that using debits and credits. And to figure out which accounts we debit and which accounts we credit, we're going to go back and use the two equations that we know. We know that debits equal credits. We know that debits are on the left and credits are on the right. We also know that assets equal liabilities plus equity. Assets are on the left, like debits, and liabilities and equity are on the right, like credits. Okay. Each account is going to have what we call a natural balance, and it follows these two equations. So debits, because they're on the left, have a natural debit balance. Liabilities, because they're on the right, have a natural credit balance. And equity, also on the right side of the accounting equation, has a natural credit balance. Okay, our debits and credits are our assets and liabilities are going to be pretty straightforward. But the equity, remember, our equity's got layers. Equity is a little more complicated. So let's go ahead and finish filling out our chart. So stock increases equity. Because it increases equity, it has the same natural balance as equity. So the natural balance for stock is a credit. Dividends decrease equity. They move in the opposite direction of equity. So dividends have the opposite natural balance of equity. Equity has a natural balance of credit, so dividends have a natural balance of debit. Revenue increases equity. So revenue will have the same natural balance as equity because they move in the same way. So revenue has a natural credit balance. And expenses decrease equity. They move opposite from equity. So they have the opposite natural balance. Equity has a natural balance of credit, so the opposite would be debit. Expenses have a natural debit balance. Okay. Before I go on with this, I should have said this at the beginning. Work with me filling out this chart, put it in your notes. What we're going over here, you could memorize it, but why? Use your brain space for something else. This is going to be a quick and easy chart. It's going to help you solve a lot of your problems through the semester. And so just write it down. Keep it with you when you do your homework. Keep it with you for quizzes, for exams, for everything. And then you don't have to memorize it because it's a lot to memorize. And the chart is just as good. By the end of the semester, you probably won't need the chart. This will become very automatic. But right now, we're in the beginning. We're just learning. So have this chart, laminate it, put it in your wallet. Keep it with you at all times so that if you have to do a journal entry, you're not having to pull something out of your memory. Save your memory. Okay. So now we have all of our account types. Remember, these aren't our accounts. They're our accounts types. Within assets, we have cash and inventory and accounts receivable. But they'll all work the same. Okay, so asset has a natural debit balance. So if we want to increase assets, we need more debits. We need more of whatever their natural balance is. So if assets have a natural debit balance, then to increase assets, we would need to debit the account. So in transaction 1, when we increase cash, that means we would debit cash. To decrease cash, we would need to do the opposite. So if we increase with a debit, then we must decrease with a credit. Liabilities have a natural credit balance. So if we need to increase our liabilities, if we owe more, then we would increase them with a credit. The increases will always be the same as the natural balance. Which means if we want to decrease a liability, meaning we owe less, then we would do that with a debit. Equity has a natural credit balance. So to increase equity, we would credit. And to decrease equity, we're going to debit. All right, now we have our 4 accounts that are going to impact equity. Because we're never going to actually debit or credit equity. This is just our guideline for the 4 types of accounts that we will actually use when we start booking our journal entries. So stock has a natural credit balance. If we issue more stock, if we're going to increase stock, we're going to credit. And if we're decreasing stock, we're going to debit. Dividends have a natural debit balance. So if we're increasing dividends because we've paid more dividends, then we're going to do that with a debit. And we'll go ahead and decrease dividends with a credit. Revenue has a natural credit balance. So if we increase revenue, meaning we've sold more goods or services, then we'll do that with a credit. And we'll decrease revenue, for example, if we get a return, with a debit. Expenses have a natural debit balance. So if we incur more expenses, we pay additional rent, we pay our employees, we're going to do that with a debit. And if we decrease expenses, maybe we get a refund for something, then we will do that with a credit. So this is our chart. As we move into the next section where we start booking our debits and credits and we start doing journal entries, keep this handy. Have it with you at all times. If you've copied this down correctly, it will not fail you. Okay, so this is going to be the last thing we do in this unit, and when we move on to the next unit, we are going to start booking journal entries. All right, see you there.